Yesterday in early trade, traders digested the report on Britain's gross domestic product growth, but it failed to support the pound sterling. Then the euro and the British pound dipped, weighed down by data on US consumer prices. Inflation in the US rose by 0.4% in September after increasing by 0.6% in August. Annual consumer inflation in the country remained unchanged at 3.7%. Core consumer prices showed a 4.1% annual rise and a 0.3% increase on a monthly basis in September, in line with analysts' projections. Given this data and last week's statistics pointing to a strong labor market, the likelihood of another rate hike has increased significantly. Now markets expect the US Central Bank to lift interest rates by 25 basis points at its upcoming policy meeting, despite recent comments from Fed officials. According to some policymakers, higher bond yields make monetary policy tighter and there is no need to further raise interest rates. However, the latest inflation data contradicts their findings. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes speeches by Bank of England Governor Andrew Bailey and ECB President Christine Lagarde. The officials are expected to focus on further moves to get inflation under control. Thus, the euro and the pound sterling are unlikely to recover in the first half of the day. In addition, traders may take notice of the University of Michigan's readings on consumer sentiment and inflation expectations, which are forecast to decline. This report may exert some pressure on the dollar. In this case, the risky assets will stay range-bound. According to the 1-hour Euro-American dollar chart, the levels of 1.0527 and 1.0559 act as support and resistance, respectively. A false breakout at 1.0559 will create a sell signal, thus bringing the euro down to 1.0527. As an alternative, if the price breaks above 1.0559, the European currency will gain strong upside momentum as part of a bullish correction, rising to 1.0586 or even 1.0608. At these levels, I recommend going short on a rebound to catch an intraday correction of 20-25 pips. In a bear case scenario, a false breakout at 1.0527 will drag the euro below yesterday's low, where it would be a wise decision to go long, counting on a recovery to 1.0559. If the price breaks through and fixes below 1.0527, the euro-dollar pair will most likely plunge to 1.0508 and probably 1.0484. At the level of 1.0484, it will be possible to go long on a rebound in the hope of an intraday correction of 20-25 pips. Long positions at 1.0508 and 1.0527 can be considered only amid a false breakout. Speaking of the British pound, the situation is similar. A false breakout at 1.2224 will make it possible to go short and push the price down. Alternatively, if the price overcomes and consolidates above 1.24, the pound sterling will have a chance of jumping to 1.2267. At this mark, traders are recommended to go short on a rebound to catch an intraday correction of 30-35 pips. Long positions can be opened amid a false breakout at 1.2127 or after the price stays firm above 1.2224. Going long on a rebound will be relevant at 1.2141 or 1.2108. Good luck and have a nice weekend.